Anyway, let's move on. Mr. Marston, do you have a stock
Yes.
for us this morning?
Oh, I have stocks. I have socks. I mean, you think I was raised at Sears, the place that sold both at once. Because some people don't know who Sears is. Anyway, um,
What's a Sears?
that's a Sears. It's why you don't buy value retailers, my friend.
Indeed.
Um,
Indeed.
yeah, a couple of names. I had put the gold stocks. I ran my screen over the weekend, and I had done the down and too cheap to be true, and with double digit revenue growth, and it spit out I am gold IAG, and it had dropped from like whatever the mid 20s to 15, and it was like 8 times earnings, and I don't know, it seemed to be a reasonable way. It over corrected relative to the price of the commodity. So I thought I was going to do so. I did some work. I was probably going to buy a starter position. And when I woke up today, it was, and the market opened, it was up 10%. So it's 18 and a half. And when my screen was 17 and I circled it for the first time at 15, 16 and change. So it's like, yeah, it's already up 20% from when I first caught my eye. And, now that I was getting comfortable doing the work, it looks like it's an interesting idea. I don't own any gold. I don't own any gold stocks. So if I wanted to get access, I might end up pitching I am gold on this show at some point. Okay, that's number one.
Okay.
Number two is SimilarWeb. Data is a service company. So we remember that being a kneecapping fiasco under SAS Mageddon. I always contended this was a data as a service provider, not a software platform as a service provider, and that they contend that AI is going to be we have some serious wind out here in Philly. That AI was going to be a tailwind and not a headwind for its business. And today they announced 2 3-year contracts combined for $48 million in revenue over 3 years. Now they're a $300 million business, and these contracts were high single digit millions. So if you do the math, 48 divided by 2 divided is 24, divided by 3 is 8. So they're basically 8 million roughly $8 million contracts for 3 years for 2 large enterprises. They did not say they were LLMs. Their LLM contracts are supposed to be 8 figures, north of 10 million when they come. But if enterprises are locking into paying this much money for this company's data, it seems like they might be right. That the world's not going to end. These are some of the biggest contracts that this company has ever signed, and it's happening when, in theory, AI is obliterating the value of their service. Because why else would the stock have gone to 2
Right.
a while ago, right? Why would it have gone to 50% of sales when software I bought it big at 1.5 times sales because that was my formula for 30 years. Buy software stocks when they go to 1.5 times sales. You always get them bought out at 3 times sales or 4 times sales. So I got smoked in this. I'm getting much closer to break even since I averaged down, but still, it's been a painful ride. But that is very good if you own SimilarWeb.
So did you buy down? Did you buy it down, or you just kind of?
I For me,
I
down
did,
is
for the record.
yes. For me, down was around here, slightly above here.
Okay.
So
I think I got some with a 250 handle.
yeah. I didn't have any. I did that in a 450 handle. And at
Got
some
it.
point, you just stop buying down because it becomes
Yeah.
the original investment. You have to remember when this went from 17 to 8, I started buying it. So my first purchase was 8,
Okay.
and my last
So you
purchase was
still
4.
you still like it here. If you didn't own it, would you buy it?
I would have. It's still only 1 time sales now. It's the market cap is around 380, and there's about 50 or 60 million in cash. So and the sales this year are 315 or 320, something like that. So you're at 1 time
Okay.
sales. I
You
don't
just size it
know.
right.
yeah. I would. Yeah, I would have. I wouldn't have a, you know, standing on my head and spitting nickels kind of position for sure. I wouldn't go all in.
No.
It's
Okay.
been a good stock for the last couple months, though.
Well, it's doubled
Yeah.
off more than doubled off the bottom, right? And but you still don't know, how this intermediate term business model plays out with AI, and they're always gonna the software stocks now that they're not imploding, unless they start growing strongly. If you're growing 20 or 30%, you can say, "See, AI isn't going to kill my business." If you're growing 10% or 8%, one more hit to your growth rate in your low single digits, mid single digits, that's no bueno. So I think it depends what your growth rate is and convincing the street what your terminal value could be, right? So your multiple. So that's where the risk is in these things, that at any one point and on any one new model release, that they drop down a plugin that gives you access to all kinds of data acquisition capabilities that didn't exist heretofore, right? So
So
how do you value that?
yeah, and I guess the question I have for that is, what is it that you would think would convince the market, right? Like, because there's a high degree of uncertainty of how this all plays out, as we've discussed. And what would it be to, like, say, oh well, I guess put it this way, like, oh, the true cost of these things is well above what the price is. How long can they run this model? They're going public. Will the market just give them runway forever? And is there actually an ROI? And if it's not, then maybe the software model of per seat, ARPU subscription, without the volume based pricing, has a place where there's a symbiotic world of, hey, the LLM is valuable, but we need to learn how to use it and not just think it's the new Google search where you can use it unlimited, because the true cost is just not there. I don't know. What would you think there would be that you'd look for something like that?
Well, in this business, that's why I alluded to growth rates, right? So if you're Palantir and you put up a 50% growth rate, you're safe, right? AI is not changing that business model, not in the short run anyway. So some of the database companies, right, had put up 30, 40% sales growth. There's been a handful of software stocks that have worked fundamentally and haven't had the slowdown that a lot of the obvious platforms, like Salesforce.com have had, right? So if the growth rate accelerates for these guys and they say, "See, it's turning into one of our biggest businesses," that the stock market would double this stock overnight. On the downside, if you saw the net retention starting to erode well below one, because they have a huge RPO, remaining performance obligation, right? So they're going to have a backlog that they're going to work through. They're never going to plunge their revenue in any one quarterly period, right? But over time, if the net retention starts to decrease and erode, and it goes from around 1 to 0.95 to 0.90 in the next 2 quarters, or something, they'll probably lose less than that, half of that. But a bit every quarter, and starts to stair step downward. Then you would say, yeah, there's a lot of business that's running off, and these guys aren't replacing it, so the model has been changed. And I think the street, if it saw that 2 or 3 quarters in a row, would get very concerned.
Yep.
Yeah.
All right. So for people that are new, Robert, what's the ticker?
SMW,
SWMD, is that right?
SMWB.
SMWB. Okay. All right. Anything more before we wrap, guys?
That's
Yeah, I
it for
just
me.
I think that just in general though, it feels as though this market is in a place where people don't really want to short it, and they also are concerned. So it's a weird spot we're in right now. I mean, I think it's more going Robert's I think Robert's strategy of, like, single stocks, know what you have, like, you can really get behind it. And even on the short side, I think not all of them are made equal. So I think it is really knowing what you want to, like, position on and getting as close to the premises of the thesis, and then what is that going to get you in an overall market, like, condition that's uncertain but at all-time highs is a good way to think about it. But we have the midterms. I think that once we get through this week, that will be the most obvious thing. That and the OpenAI and Anthropic S1's coming out, and then eventually those deals, and we'll see how SpaceX trades. By the way, just last thing in SpaceX, not bad deal. I was impressed that they were able to get that thing done and have it trade that well. Kudos to the bankers.
Kudos.
Well,
I agree.
It's day 2, but I agree. Kudos to the bankers. See how long they can hold it.
Yeah. No, I mean,
All right,
look,
gentlemen.
remember 20. Okay.
No, go for it.
No, I was just gonna
What
say,
were you
got to
gonna
remember 20% of the supply is gonna be able to be released by June 30th. So you will see. That's what is that? That'll be $400 billion of stock that's going to come out to the market here in 2 weeks. So I think that will be the first major test, and they will have the passive guys like pick up some of the stock. But remember, the S&P is not in on that, so that's 19 billion that won't be there. But again, 400 billion, that's a lot of stock.
Yep, that was the first gate to not be classified as a flipper and for you to not get allocation to IPOs. So you've got what, 2 weeks to hold it.
Yep.
All right, gentlemen, good show. Thanks for following us on Wall Street Beats. Ben, as always, I love the hat. We'll be back here tomorrow.
Einstein Energy, baby.
WallStreetBeats.com. Come check us out if you haven't. We've got a great content behind the paywall, and Einstein Energy. Those bars don't suck, huh, Ben?
No,
they're pretty tasty. They're pretty tasty.
Yep, they're pretty good.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.